Hello everyone, I'm Ankit and you're watching StudyIQ IAS English channel. Now every time the US Federal Reserve is about to have a meeting on deciding the policy rates, this leads to increased discussion in the Indian stock markets, in Indian newspapers, in Indian news channels. So there must be some reason, right? Why changes in US economy, will it or will it not have impact on India? It is quite natural that yes, it will have an impact, because on one hand US is the world's largest economy and it controls, or its own currency is the world's own reserve currency. So that is why increase in reduction in the supply of the US dollar will naturally have implications on the US economy, and that is the subject of our today's discussion. Now, why are we going to discuss this particular event? This is because recently the US Federal Reserve, it chose to keep the interest rates unchanged. And the US Federal Reserve and its chairman Jerome Powell, he undertook, or he highlighted that there is an uncertainty going around in the US economy, and because of these uncertainty, the US Federal Reserve wants to take a wait and watch approach rather than making the decisions quite early in the period. They'll want to understand how these uncertainty will affect the US economy, and then the US Federal Reserve will be in a position to make its decision accordingly. Now, what are the uncertainties that is there in the US economy? Now, this was released by a projection passed by the Federal Reserve that the slower economic growth might happen in United States economy. Further, there will be higher inflation and unemployment, which underlines the challenging environment that the Fed is currently operating in. And the most important disruption that has happened in the US economy in past few months is the onset of the Donald Trump as the United States president. And since he has become the United States president, he has imposed many policies, one of which is known as higher import tariffs, which has led to fears of being inflation in the US economy. And therefore, the US Federal Reserve wants to understand these processes, how these implications will affect US economy, and make its decision accordingly. Now, during the COVID pandemic, we saw that world witnessed a slowdown in the economic activity, and US was no exception. So, to deal with economic slowdown, what US Federal Reserve did, it started to increase the money supply in the US economy. And how did any central bank like US Federal Reserve increase the money supply? It reduces the policy rate or interest rates in the US economy. Understood? So, this reduction in the interest rates, obviously it leads to increase in money supply, which automatically promotes the economic growth. But as a consequence of this increased money supply in US market is that we saw it led to increased level of inflation in few months since the interest rates were reduced. So to control this inflation, again US Federal Reserve, it increased the interest rates to reduce and control the money supply, and therefore US economy or US Federal Reserve was able to control the prevalence of inflation in the US economy. Now, there is a fear that due to this reduction in money supply, which was done to control inflation, this has led to slow economic growth. So now, the pressure on the US Federal Reserve, including from President Donald Trump, is that it should promote economic growth. So, in going forward, we are seeing that US Federal Reserve is in a process to reduce its policy rate or interest rate so as to increase the money supply and promote economic growth in the US market. So this is the context of our today's discussion. So in this context, what becomes important, that how it will or what effect will the reduction in the Fed rate or policy rate of United States Federal Reserve will it have on US economy and then on Indian economy. So let us in this regard understand what is the federal rate of United States. But why are we discussing the policy rates of United States Central Bank? Why are we not discussing the policy rates only of RBI? Because from that US Indian exams perspective, you can understand RBI is more important, but the answer is you have to look at the PYQs that have been asked recently by the UPSC. For example, in this 2022 PYQ, there was this first statement that said tight monetary policy of US Federal Reserve could lead to capital flight. So to solve this particular statement and to mark the statement correctly in the exam, you need to understand, right, how tight monetary policy of United Federal Reserve impacts Indian economy. Similarly, actions of the United States Federal Reserve was a subject of question which appeared in 2021. So similarly, how does action of United States Federal Reserve, does it have on Indian bond yields? We'll understand. So these are kind of questions that are appearing in the UPSC exam, and to solve these questions you need to not just have an idea of how RBI's policy affects India's economy, but you need to also understand how US Federal Reserve's policy is affecting Indian economy in general. Understood? So that is why we are going to cover this topic from our exams perspective. But the question in your mind is, what is United States Federal Reserve rate, or what is Fed rate in general? Now, to understand Fed rate, it is very similar to what repo rate is for RBI. That in order to increase or reduce the money supply, RBI increases or reduces the repo rate in Indian economy. Similarly, when US Federal Reserve, which is US's central bank, it has to increase or decrease the money supply in US economy, it changes the rate or interest rates in the economy, which is known as federal funds rate, commonly called as Fed rate. So, using the Fed rate, US Federal Reserve controls the availability and cost of credit in the US economy. And naturally, by changing the federal rate, it influences other interest rates like borrowing rates of bank, interest rates by the bank which is given to the customers of the bank, and hence it influences borrowing cost in the US economy for both households as well as businesses. So therefore, for broader financial conditions, to promote economic growth, you need to reduce federal rate, that is the policy rate of United States government. And during the time of slower economic growth, countries or banks like RBI, Federal Reserve, what they do? They follow cheap money policy, or in other words, they follow expansionary monetary policy. And during expansionary monetary policy, what banks want to do is that they want to increase the money supply. And how to increase the money supply? The most common way to increase the money supply is to reduce the interest rates that are prevalent in the economy. So this is what the United States Federal Reserve is also doing. It is trying to increase the money supply by reducing its interest rates, which in US is known as Fed rate, right? So this happens during the time of economic recession or economic slowdown. That is, to bring economy out of slowdown, you create easy money policy, you increase the money supply so that people will have more money with them. They will try to spend this money in goods and services, and naturally it will lead to increased production of goods and services. Similarly, during expansionary monetary policy, banks offer loans at a much cheaper cost to the businesses, which follows or which leads to increased capital investment in the economy. So all of this eventually leads to economic growth. So that is why banks around the world, including the US Federal Reserve, it is following the easy money policy. And how to follow easy money policy? By reduction in the market interest rate. I hope I have made federal rate quite clear to you. Now let us understand in general or quite quickly, how does federal rate or changes in federal rate has implications for US economy. Naturally, you can understand when banks like US Federal Reserve rate, it is following expansionary monetary policy, it is making credit or loans available in the market at much cheaper cost, and this directly incentivizes borrowing by businesses, household, and using these business money that businesses and household borrow from the bank, they spend it on goods and services. Businesses spending it on capital expenditure. They undertake expansion of factories, they lay down new factories, they lay down or buy new machineries, all of which leads to higher economic growth. Similarly, it increases the demands for goods and services, as people during easy money policy or expansionary money policy will have more cash in their hand, and naturally they will have a propensity to spend this cash on buying goods and services. And when this will lead to increase in demand for goods and services, naturally the companies who will be manufacturing these goods and services will have to increase the supply, which will push up eventually the wages, and eventually it will spur economic growth in the US economy. So this is how changes in US federal policy rate, especially lowering the interest rate, has positive implications on US economy. Now let us understand how lowering of Fed rate has implications on Indian economy, because we need to understand this to solve questions in prelims, right? So in that regard, the first consequence or the most direct consequences is that when interest rates in US market reduce, you understand the investors in US market, they witness lowering of their returns in their particular market. So naturally, investors in US market would want to take money out of US market and invest elsewhere where they might be getting higher economic return. So some of these investors, they tend to invest in India, and that is how it leads to increase in foreign investments in India. That is both foreign institutional investors, foreign direct investors. Also, they try to invest in Indian market in order to achieve higher economic returns for their investment. Also, another consequences of this is that the investors who have already invested in Indian market, they'll not pull their money out of Indian market. Otherwise, had US increased its interest rate, you can understand investors in Indian market will pull out their investments from India and take this money and invest in US for a higher economic return. But the reverse is happening. US, instead of increasing the interest rate, it is decreasing, which means the investors in India will be happy with what they are getting in India rather than moving it to US. So it will lead to reduction in capital outflow, and whenever there will be reduction in capital outflow, Indian stock markets will be very happy. Similarly, when increase in foreign investments in Indian markets will happen, it will lead to higher appreciation of Indian stocks in general. Further, whenever foreign investors are bringing more money into market, you can understand inflow of dollars will increase in India. But to spend in Indian market, you can't spend in dollars, and you need to convert this dollar into Indian currency, that is rupee. So therefore, in this regard, demand for Indian rupee increases, and whenever demand for any commodity, be it currency or goods and services, increase, its value automatically increases. So therefore, the value of Indian rupee increases, which means rupee will witness appreciation in its value. Similarly, RBI, in order to promote economic growth in India, like what US Federal Reserve is doing in US, RBI would want to reduce its repo rate, right? But whenever US it has higher interest rates, RBI won't be able to reduce its repo rate. Otherwise, what will happen if RBI reduces its repo rate and US Federal Reserve doesn't? Investors in Indian economy will pull their money out of India and invest in Indian market. But now, when Federal Reserve is itself reducing its interest rate, now RBI will be very comfortable in reducing its repo rate, right? So therefore, it increases the opportunity for RBI to make decisions on its own economic condition rather than depend on what the Federal Reserve or other Western economies are doing, right? So it changes Indian RBI outlook towards making its own decision. Further, increased money supply in US government or in US economy means people in US will have more money at their hand, and using this money that they have in their hand, they look to invest in goods and services, and naturally the demand for goods and services will increase in US economy, and some of this demand will have to be met by Indian exports out of India and into US markets, right? So therefore, demand for Indian exports will automatically increase because people in US have more money and they are demanding or they are wanting to buy goods and services. So therefore, Indian exports will witness higher demand, and naturally it will lead to higher Indian exports from India to US market. Understood? So these are the implications of how reduction in federal policy rate will have implications in India. Similarly, when US government reduces its interest rate, you can understand there will be increase in foreign investment in Indian market. So technically, this increase in foreign investment will mean demand for Indian government securities will also increase, and when Indian government securities, their demand increases, bond prices of Indian government securities, it increases. And we have understood in our previous discussion, whenever bond prices increase in Indian economy, bond yield has an inverse relation. Therefore, bond yield in India, especially of Indian government, will reduce. So these are the implications of how changes in US market, particularly reduction in the Fed rate, will have implications in India, that it will lead to increased foreign investment, it will lower the value of bond yields in India, it will lead to reduction in capital outflow, it will lead to increase in value of rupee, that is appreciation, it will allow RBI to make its own policy decision independent of what US might be doing, and it will lead to higher demand for Indian exports in foreign market. So this is how we understand global decisions and their implications on India. Similarly, many important topics will be uploaded on our channel, so please stay tuned to that. For that, you need to subscribe to our channel to get timely updates, and I will see you again for more informative videos. Please give me permission. I will take your leave.